Over the past year, the global energy sector has been profoundly shaken. Oil prices have more than halved to below $50 a barrel, under pressure from oversupply as well as China's weakening economy. This gloomy context overshadows the 10th Kazenergy Forum in Kazakhstan.
When the Kazakh capital staged the first energy forum 10 years ago, it was a rising market. Now things have changed. Prices are low as well as demand. How can energy producers survive? Let's ask those here in Astana.
One leading energy expert told the gathering that he predicts oil prices will remain low in 2016 and it'll take at least 4 years before they recover to sustainable levels. Multinationals and oil-rich companies are adjusting their budgets according to various scenarios. The immediate response is to cut costs.
And we're expecting a very significant decline in capital expenditures on the order of 30% or something like that. A lot of projects are going to be delayed because the companies just simply don't have the money anymore. So they're going to be a lot more choosy and careful about how they spend their available money.
Take Kazakhstan. Here, oil accounts for almost a third of GDP, half of revenues, almost 2/3 of exports. The president says the country will have to adapt to a new economic reality. According to the head of the main energy association, oil prices should rebound to a comfortable level in the medium term.
We may see a period where the price plunges, but the exploitation cycles of oil fields last for decades. I think that in such hard times you just have to muddle through. And if we see the oil price drop as far as $30, then what will happen is the global supply will be reduced by producers, and undoubtedly the price will then start to climb.
But what if this rebound is curtailed by radical shifts in the energy market? According to the recent BP analysis for the next 20 years, global demand for energy is expected to rise, but at an annual rate of 1.4%, lower than expected.
And it's likely to be an environment where demand is perhaps slower than we envisage, as we look at the impacts of new regulations encouraging solar and wind, which will affect particularly the electricity industry. As we look at the difficulties perhaps economically in parts of the world, China is perhaps moving on a new path which will decrease growth a little. China is vast. China will still need large amounts of energy. But the oil market tends to always work on comparing reality with what it expected the world to be.
The global energy sector is battening down the hatches for more stormy weather. Many analysts say the glory days when oil fetched $100 a barrel are probably gone forever.